my clients pull out. They say we are expensive now.
Oh, too bad. I have an idea. What if we call my friend that works as tax advisor at KPMG?
That's a good idea. Let's call him now to give us some advice.
Hello dia.
Hi Yasin, are you busy right now? My friend and I need some of your advice about our company.
No, I'm not busy right now. Why?
We are going through losses. Some of them got losses and some of them got scammed by supplier.
Oh. Can you give me some time so that I can seek advice from my senior?
Thanks in advice. Hope to see you soon.
Alright, thank you Lydia. See you soon. Bye bye.
Five hours later.
Hello and very good morning everyone. Today I would like to explain about trade association and share some examples that exist here in Malaysia. Firstly, what is trade association? Under section 53 subsection 3 of ITA 1967 defines trade association as any association of persons, of partnership or of person and partnership formed with the main object of safeguarding and promoting the businesses of its members. Which means a trade association is an organization formed by businesses or individuals who work in the same industry or professions. The main function of a trade association is to support and promote the interests of its members. These associations usually help by setting industry standards and ethical guidelines, providing training and education to improve skills, acting as a bridge between businesses and the government for policy discussion, and lastly, encouraging networking and sharing of best practices. Now, let me give you some examples of trade association in Malaysia. First, Federation of Malaysian Manufacturers. This is one of the largest trade associations in Malaysia. It represents manufacturers from various sectors and provides support like training, trade mission, and policy advocacy. Secondly, Malaysia Automotive Association or MAA. This group represents car manufacturers and importers. It works to develop the automotive industry and give updates on car sales and policy. Thirdly, Malaysian Palm Oil Association or MPOA. This association supports companies involved in palm oil plantation. It focuses on sustainability and protecting the industry image. Fourthly, Real Estate and Housing Developers Association or REHDA. It represents property and housing developers and works closely with the government to improve policies and laws related to the housing industry. Last but not least, Malaysian Association of Tour and Travel Agents or MATA. It supports tourism businesses like travel agencies and tour operators. One of its famous events is the MATA Fair, which promotes travel packages. In conclusion, trade associations play a big role in helping industry to grow, stay competitive, and improve their standards. They also provide a platform for businesses to voice their concerns and work together to achieve goals. They act as the voice of the industry and help raise the standard of professional and business practice in Malaysia.
Resident status can be determined based on tests laid down under paragraph 8 subsection 1b and 8 subsection 1c of the ITA. These tests are similar to those used to determine the resident status for a company. This happens when the management and control of its business or affair are exercised in Malaysia or registered the company in Malaysia during the basis year for a year of assessment. The trade association will be decided as resident in Malaysia. Once the resident status has been established for the basis year for a year of assessment, it shall be presumed until the contrary is proved that the trade association is resident in Malaysia for the purpose of the ITA for the basis year for every subsequent year of assessment. Next, it is about tax rate. First, we have resident in Malaysia, and second, we have non-resident in Malaysia. For resident in Malaysia, it will be calculated as a scale rate that similar to those applicable to a resident individual as specified in Part 1 of Schedule 1 of the ITA. And for the non-resident, it will be calculated as a flat rate which is 30%. The tax accordance with general provision of the ITA applicable to a non-resident. It is also similar to the rate applicable to a non-resident individual.
Trade associations in Malaysia are treated as business sources if they receive revenue like income, even if they do not carry out normal business operation. According to Income Tax Act, any such income is deemed to be gross income from business. One common source is subscription fees paid by the members. These are continual and considered revenue in nature, so they are taxable under the business income category. Although some maintenance entrance fees are taxable, they are treated as capital expenditure and are usually not subject to tax unless clearly structured as revenue received. When a trade association conducts a transaction with a non-members, any profit earned is treated as separate business sources and is fully taxable because the mutuality principle does not apply. If the association uses plant and machinery to carry out income-generating activities, it is eligible to claim capital allowance under Schedule 3 of Tax Act. Trade associations use calendar year from January to December as a basis period for calculating their deemed business income. Next, we look at non-business income, which includes interest, dividend, and rental income. These are not considered part of the business sources but are still taxable under Section 4 of Income Tax Act. For example, interests fall under Section 4C and rental under Section 4D and dividend under Section 4E. Even though these are passive income streams, they are still subject to tax. Next, treatment of expenditure. A trade association is allowed to deduct any outgoing or expenses incurred in the production gross income as long as it is related to the revenue sources. These include items like administrative costs, salaries, and utilities. However, certain expenses are not deductible under Section 39. These include personal expenses, capital expenses without allowance, fines or penalty, and non-business related entertainment expenses.
Now, I will be explaining a tax provision that provides significant relief to trade associations in Malaysia, the Income Tax Exemption Number 19 Order 2005. First, tax exemption on subscription fees. Under this order, the statutory income derived from members' subscription fees is fully exempt from income tax. This means that the core revenue received from members, such as annual fees, is not taxable. Why is this important? Because it allows trade associations to focus more on supporting their members, like hosting seminars, negotiating policies, or setting industry standards without the added pressure of income tax on their main source of funding. Second, understanding statutory income. Statutory income is calculated by deducting production-related expenses and allowable allowance under Schedule 3 from the gross income received from member subscription. The formula for statutory income is gross income minus reproduction expenses plus wage allowance. Under the 2005 exemption order, this statutory income from subscription fees is not subject to tax. Number 3, express allocation between exempt and non-exempt income. But wait, what if the association has other income too, like rental or investment returns? Not all income is exempt. So we need to fairly allocate shared expenses between the exempt income and non-exempt income. This is the formula we use. Allocation expenses equal to A divided by D multiplied by C, where A total common expenses, B gross income from subscriptions, and C total gross income for all sources. Let's say total expenses are 100,000 ringgit, subscription income is 500,000 ringgit, and total income is 1 million. Therefore, allocated expenses equal to 100,000 ringgit multiplied by 500,000 ringgit and divided by 1 million. Therefore, allocated expenses equal to 100,000 ringgit multiplied by 500,000 ringgit and divided by 1 million. And we will get 50,000 ringgit. So, with the 50,000 ringgit of those expenses go to the exempt portion and the rest applies to the taxable portion. Why it matters? It helps trade associations stay compliant, avoid overpaying tax, and focus funds on member supports. The conclusion is the 2005 order exempt subscription income from tax. Just calculate statutory income, allocate expenses fairly, and follow the rules. Thank you.
According to income tax exemption, when a trade association has a capital allowance that are shared between exempt income and non-exempt income, only a portion of that allowance can be claimed. The allowance must be apportioned using this formula where D times B multiplied by C, where D is the total amount of common capital allowance, B is the gross income from member subscription fees, C is the gross income from all business sources. This formula ensures that the capital allowance is only given for the portion related to taxable income. For example, in this illustration, total capital allowance is 20,000, gross income from member subscription fee is 80,000, and the gross income from all business sources is Rm 200,000. So using the formula D times B multiplied by C is 80,000 multiplied by 200,000 and times by 20,000, which we can get Rm 8,000. So the allowable capital allowance that can be claimed is Rm 8,000. This means Rm 8,000 can be deducted from the taxable business income.
Next, we will discuss about special donation. Special donation are contribution given to an organization. This donation may be for a specific purpose or general use. Donation received for specific purpose instead of donation is made for a clearly stated purpose. The money is meant for a long-term improvement or investment, which means it is not for daily expenses. For example, a donation specifically for building construction, renovation, or repair. The donation will be treated as capital receipt, but if the money is not fully used, then the unused amount may be considered as revenue received and become taxable. Next one is general donation. General donation, like special subscription, is used for regular short-term purpose. For example, donation for anniversary celebration or festive event. The donation will be treated as revenue received. Since it is considered an income, the donation will become taxable. Now, I will explain some of important tax administration procedure that must be followed. Before you can submit anything, your organization trade must first be registered. Generally, this can be done by 1 of 2 ways. Firstly, under Society Act 1966, or alternatively, as a company limited by guarantee, is under Company Act 2016. Once your organization is registered, you will need to submit the registration form together with required fee and supporting document to the Registrar of Societies, also known as Pendaftaran Pertubuhan Malaysia. After that, the association controlling member, such as the chairman or secretary, are required to declare all resources of business income and expenses to Inland Revenue Board, also known as Lembaga Hasil Dalam Negeri. The tax return form must be submitted by 30 June of the following year after the end of financial year. On the other hand, the association that do not carry on any business, the tax return form must be submitted by 30 April of the following year. For inconvenience, the form can be submitted online using e-filing via the RIB website. Lastly, if you fail to submit your tax return on time, you may be penalized. The IRB has the right to impose penalty under subsection 112 subsection 3 of the Income Tax Act 1967. This is the required document that you need to submit to ROS. Firstly, you need to prepare a copy of Society Constitution. This document outlines the role and objective of society. Secondly, you must submit a list of name, addresses, and occupation of society office bearers, such as the chairman, secretary, and treasurer. This will be supported with IRB stamp duty paid tenancy agreement. Thirdly, provide a list of name, addresses, and occupation of all society's members. Next, include minute of meeting where the society office bearers were officially elected. This serves as evidence for the election process. And finally, you must submit any other document requested by ROS depending on the specific requirement of your society application.
In conclusion, all parties have come to a mutual agreement to establish a trade association in order to collectively support and promote their shared business interests.